Let's do some top day trade now with Alan Knuckman, the chief market strategist at bullseyeoption.com, and Phil Flynn, a Fox Business Network news contributor, here for our trader game. Round number one, turn me right around. What would it take for you two bulls to turn, and what do you think can turn those bloody bears?
Well, if you haven't been long in 2023, you've been wrong. Now, there are a lot of people that feel like they're missed out. So I don't know. That's the question I'm asking. Psychologically, at what point do people say, you know what, I got to get back into the markets? For me, I think the only thing that would shake me a little bit is if we had more than a 10% sell-off. You know, we've rallied 25% off the bottom in the S&P. So even a 10% pullback could just be some profit taking. So it would have to be something out of the blue to shake up my optimism. And we're getting close now to, we're within striking distance of the all-time forever highs in the S&P, and the dollar's starting to go down. So I think this could accelerate and continue this momentum.
I would agree with that, and it's going to take an event. And one of the things that would be on my radar for a potential black swan is some more banking problems, right? One of the reasons why the market failed to perform for a short period of time was mainly because we had some concerns about the banking sector with raising interest rates. We had Credit Suisse go out of business. I mean, that's one of the oldest banks in the world. So if you look at all of those risks, if they reemerge, that could derail the market. But what we're going through, I call it the AI revolution. This rally in the stock market isn't concerned about the slowdown in the economy that hasn't really developed yet. They're looking forward to the AI revolution and finding out ways to where companies are going to benefit from this. And so they're overlooking the short-term headwinds versus some long-term profit potential. And that's why the market's outperformed.
Round number two, rain pain. Corn is now getting crushed after the recent storms. Explain how that record rain did not alleviate the drought conditions, and how do you make a trade here?
Well, because the drought was so bad ahead of time and we got too much rain too soon. And I'm not going to kid people. That was $1 million rain. I heard from farmers all over the country that were praying for rain. Some of them said, gosh, I prayed too hard. I got too much. And to be honest with you, because the crop conditions going into this rain were in the worst they've been since the 1980s, the rain is going to help, but we're still going to see reduced yields. Now, one of the things we saw is a lot of volatility in the market. The USDA is more optimistic about the crop than many of the farmers are. And so that they actually, in the soybean crop, they actually, didn't downgrade the crop as much as the farmers thought they should have. But we are still in a situation in a weather cycle where just one rain isn't going to make this crop, and we're still going to see reduced yields.
Rain makes grain, but it's got to be the right kind of rain. And I don't think it was. So there's going to be opportunity. We use the word volatility, but volatility is opportunity. With corn here at the $5 level, let's remember we were just almost at $6.50. There's going to be more action this summer, and typically the price pop potential is what we look for.
Round number three, heat map. We're seeing record temps around the world. So how do you play that high rise?
Well, the market heat map is something you see on every trading platform. It tells you which stocks are performed bullishly or bearishly on the day, and with red and green little boxes, and you can see their size and expectations. So it's a good way to see what's happening on a daily basis, a weekly basis. But I usually look at it more on a monthly basis and look at how sectors perform and see if they've lagged or led, and look for better risk reward opportunities because money always moves. It rotates from the leaders into the laggards.
And when I look at the heat map, if it's really hot, I go back to energy, right? Because when you have the heat on, it drains natural gas supplies. It raises concerns about supply and demand. And to be honest with you, even though we have this energy transition going on, part of the problem with that is we're investing too much money in energy supplies that don't produce as much energy and are not as reliable. And we're pulling back on investment in fossil fuels. And so in the big picture, we're underinvested in fossil fuels based on almost every measurement. And so that could mean that if you have extreme weather conditions, maybe not the solar farm, which might work good in a heat wave, but maybe get long some fossil fuels, because that's going to be the play.
Let's get to the bonus round question for today. The CEO of Disney is getting a lot of headlines lately, but let's take a look at an actual Disney trip. What does it cost to go around the world and visit all of the Disney theme parks? Is it $80,000, $100,000, or $115,000?
I can't be paid. You couldn't pay me $115,000 to go to every theme park at Disney. That's been done. That boat has sailed for me. Not happening. But I pick 115.
I agree with 115 because a lot of the consumers are complaining about Disney.
Great job. You both are winners. Business First AM will be right back.
I'm going to Disney World. No, I'm not.
No way.
Go to businessfirstam.com for where to see our show on TV.